What's going on, guys? Jay here. In this video today, I want to show you how I do my charts at the beginning of every week and also at the beginning of every single trading day. We are going to use a chart for NQ because this is a chart that I'm mostly trading on now, and the markups that I'm going to do today, which is a Thursday, are also going to help me trade for the Friday. What you're noticing here is that it's very blank. This is a chart of the June futures contract, so I've rolled over already from the March one, and that's why there's not a lot of information here. The first markups that I do on a weekly time frame are the previous week high and the previous week low. Now, normally there's a bunch of new week opening gaps or previous week opening gaps on these charts. This is the rolled over June contract, so I don't have anything. And for this week, we did not have a gap at the open. This is currently hidden behind this level here, but I only mark the weekly open. You can have it as part of the indicator for the session highs and lows, but it does crunch up your charts sometimes, so I like to have a horizontal ray with that level. So marking the previous week high and the previous week low levels is fairly easy. I don't think I need to explain that to you, but for the weekly open, I'll show you exactly where I go for this level. So here we are on the 1 minute time frame. This is Friday's close, and this was the last 1 minute candle that was printed on Friday. And then on the Sunday open at 6 p.m., this is the opening price. It's a bearish candle, so it opened here, it fluctuated, and it closed down here. So this is the weekly open, and it's a premium and discount level for the entire week. So that's why it's important to have it on your chart. Let me go back to the weekly chart. So these are the three most important levels before you start the week, because the markets are going to want to gravitate towards one of these levels or around the weekly open. The next thing you want to do is drop on your daily time frame. So for the daily time frame, the two most important levels are going to be your previous day high and your previous day low. So we are now entering a new day. So this is going to be the previous day high, and then same thing for your previous day low. All right, you notice that we're currently in a large fair value gap. This is also something that you can highlight on your chart. So you would make a rectangle where that fair value gap is, to make sure that when you do drill down on lower time frames, you're actually able to know exactly where you are on a higher time frame. So make sure that you put it the same color as a green fair value gap so that you don't get confused. So this is green, and you could also label it so that you know exactly what you're looking at when you're closer. This is a daily bullish FVG. All right, and you don't want to extend that too far. This is the range that we're working with on the daily. So for tomorrow, I want to have the information, so I'm going to set it like this. Then when you drill down on a lower time frame, which is a 4-hour time frame, you can adjust these levels to make them representative of where they are on the lower time frame. Previous day high, previous day low. You can see the daily bullish fair value gap. You know that when you're coming in this area, it's going to be a little tougher to take a quality short in here. So what are we seeing on the 4-hour chart? We're seeing a bearish fair value gap here. So you want to identify that as well. Make sure that you change the color to red and that you're labeling it 4-hour bearish FVG. We have another one right here. Going to do the same thing. And then is there anything else on this chart that could be considered a point of interest for the price that is currently here? At this time, no. We have a swing that's identified here. We have another swing that's identified here. I mean, this level up here could be a target if the market wants to go to the upside on Friday. And then on the lower side, this could be another potential target for the market to go. So I'm not going to highlight it as anything, but these would be the next logical liquidity levels for the market to go. Again, the market moves from inefficiencies and imbalances to liquidity levels. And this is exactly what we highlighted here. It looks like a lot. There's a lot of information here, but when you're on a lower time frame, you have this higher time frame narrative and you know exactly where you are on the higher time frame. I normally go to the 15-minute time frame and then I look for the narrative. Again, you may have to adjust some of these levels because you charted them on a higher time frame, so make sure that you're placing them at the correct area on the lower time frames as well. These higher time frame PD arrays will help you navigate the markets better to try to identify the draw on liquidity. An extra piece of information that we have specifically today would be a new day opening gap. The new day opening gap is between the candle at the market close and the candle at the market open. This is where it opened. So I'm going to change this to another color. Now this may seem like a lot of information, but when you're looking for a setup, trying to take a long in these red areas is going to be lower probability, and then taking shorts in these green areas is going to be lower probability as well. Also, remember that the weekly open acts as a true premium and discount for the entire week. So it acts as an extra confluence to be taking some shorts above this level and to be taking some longs under the weekly open level. New week opening gaps and new day opening gaps, price tends to want to gravitate towards it, and then if it bounces back, you can start looking for a long, but if it starts to go under, then you can start to look for a short until you hit a higher time frame PD array or a liquidity zone. So this is how you use new week opening gaps and new day opening gaps. It's like gravity. Price will tend to gravitate around it, but they're also a nice indicator of if price wants to bounce off of them, you could be looking for a nice long. And if they're going under them and they're reaching for that lower previous day low or liquidity, then it's a nice hint to go short. So please stick around for the example so that you can see while this is occurring live, how I'm actually analyzing and managing these charts. If you guys haven't seen this document yet, I know there's a few people in the group. The cheat sheet for CPI, we don't have a ton of information. That's why it's kind of a TBD, to be determined kind of price action day. But as per my findings over the last year, year and a half, normally it does exactly what it's doing now, which is it's a huge move, then a retracement to the initial price of the news. So it seems like that's where it's going right now. Looks like it wants to go towards that candle. Our kill zone starts at 9:45. Yeah, when both liquidities are taken on ES, it was the case this morning. We can expect lower probability conditions for a Nexus Blast setup to form. So this is what we had this morning at the news event. So both sides were taken. You guys can see here, these are not timeframes that I usually looked at. This is really zoomed out. I never really looked at the weekly candle because I'm more of a 5-minute focused trader. Not saying that I shouldn't be looking at it, but it really wasn't something that was playing out for me until I understood the accumulation, manipulation, and distribution that occurs during the week. And that makes a lot of sense. So I marked out my previous week high and previous week low. And then I'm always looking at the 4 hours. So I did a couple markups on the 4 hour for today as well. We have a bearish FVG. We have a blue liquidity line over here. So those are going to be permanent markups for today. We have a 4 hour blue line here, a 4 hour swing point, so that when we are close to the tree, we still have the eyes on the entire forest and we can see what's going on. So we're approaching the news event and we're approaching this 4 hour liquidity blue line. I'm going to repeat it. The game plan for today, as it is for every single day, I'm not necessarily looking for a trade, but I'm looking for the setups. And if they make sense, then we have to quickly identify if there's something that's going against them that lowers their probability significantly. And then if the answer is no, then we have a mechanical approach to both systems, and we can enter and manage as per the rules that have shown evidence-based consistency over It's going to be close to a year now for ES. And for NQ, it's still introductory, but you guys are absolutely killing it. So that's the plan for this morning. Excited and looking to just make evidence-based decisions from a protocol that has shown consistency over time. ES, let me go back to ES. By the way, guys, these are the rollover contracts. So Friday is the last day that you can roll over your futures contracts. If you were a couple of years back and you were trading corn futures, if you didn't close your position at the end, you would get corn delivered at your door. So I don't know if that's still the case, but certainly made me giggle when I read that about futures. So we got liquidity here, the blue line, liquidity here. I'm going to remind everyone again, time is now New York local time UTC -4. So this should reflect on your screen as well. Don't want to over welcome or stay in here. We got 400. We banked. That's it. That's it. That's the trade. We got 20 points off of that. It's pretty simple.